Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 67 to 69 as the bull bear zone. And ideally, if ES held above 71 to 72, then we were looking for a move up towards the 77 to 79 area. So that played out pretty well overnight, where buyers stepped in at the 67 to 69 zone and pushed ES up towards 77.5. So at this point, we know that short term, the buy side is more dominant, and you know, on the bigger picture, we already knew that we were in an uptrend, but now the short term is also in alignment, and we could get some continuation now heading into today. Now, as far as the catalyst goes, we have consumer confidence at 9 a.m. Central, but the next major catalyst is going to be the FOMC announcement tomorrow, and because of that, today could just be a very balanced and range-bound day, where on the upside could be limited to 81.75 to 83.75, and the downside could be limited to 71 quarter to 73 quarter. And ideally, at this point, we do want to see ES holding above 71 quarter to 73 quarter in order to just confirm the buyers being as strong as they appear to be right now. And for the buy side to continue to be dominant, we do want to see ES holding above today's initial support zone. We're going to use 66.75 to 68.75 as the bull bear zone, but that's kind of the last spot where buyers can step in. And if this market is truly strong and eventually can lead to a new high, then we should not even pull back to the overnight low and to the bull bear zone. At this point, considering the momentum we've seen in the overnight session, 71 quarter to 73 quarter is really the key area, and we should not really get any deep pullbacks from this point forward. And the upside objective is the gap at 80.75, and then the 81.75 to 83.75 initial resistance zone. Above it, we have the all-time high at 85.75. But given the relative weakness in TF, given that the market could just be waiting now for the FOMC announcement tomorrow, it's unlikely that we're going to get a break, to a new all-time high. We can certainly go up and test the initial resistance zone, find some sellers over there, start balancing in a range, but getting a break to a new all-time high just seems very unlikely ahead of FOMC. Typically, ahead of FOMC, you'll see a very balanced kind of range-bound market. Now you can still have directional conviction, heading into a catalyst, but the idea is that at this point, the market is more likely to balance above 71 quarter to 73 quarter, and most likely between the initial support zone and the initial resistance zone. And even up to like the gap, if you're getting a nice push up to the gap and you're in from a long, from a good price, probably a good idea to take some profit and not really, press it unless you're seeing some pretty good signs in real time that are suggesting that, this market is quite strong and we will go up and test, the 81.75 to 83.75 zone. And then over there, very good idea to take profit and, not really press too much on the upside yet again, because just, the overall context doesn't support the idea of a break to a new all-time high. Now that being said, anytime you're putting on a trade, you have to know that anything can happen at any time in the market. That this is basically these are the high probability ideas heading into the day, but at the same time, I'm not looking to aggressively short this market. Initial resistance, I do expect a reaction, and it could set up a nice shorting opportunity on the day time frame. But knowing that the buy side is more dominant here, I'm not going to be looking for any, major moves to the downside. And I think that if you are taking shorts at the resistance zones, they're going to be more rotational type ideas, where you get a 2.5 to maybe 4 point rotation off the zone, but you don't really get any big failures at this point, just because there really isn't any major catalyst on the day time frame to really drive price big one way or the other. We have consumer confidence at 9 a.m. Central, but I think that's going to be overshadowed by the upcoming FOMC announcement tomorrow. So, the main idea on the day time frame today is to look for a relatively balanced range-bound session, but with a more buy-side tilt, with a more upside tilt to it. And as long as the internals are holding okay, and we're not seeing any clear signs that are telling us that the sellers are being aggressive and stepping in yet again, then our focus is going to be more on the long side up to the initial resistance zone. Once we get up there, if we're kind of exhausted and the internals are not extremely strong and you're seeing some signs that this could kind of stall out here, at that point in real time, there could be a potential short setup, with a stop at the all-time high or something, right? So if we get up to 81.75 to 83.75, there could be a high probability short setup, which is not like a huge reward to risk idea, but more like a rotational idea where, the market could test initial resistance and then rotate back down to 77.5 to 79, something like that, and then just kind of balance out. So those are the main thoughts heading into the day. Of course, as the market opens, we'll be watching what's happening to kind of confirm that, the trade plan is in alignment with what we're seeing in real time. And then based on that, we'll identify some high probability trades. But the main focus right now is going to be on the long side, targeting initial resistance, and just looking for a two-sided market, but more just the better trade setups being on the long side. So those are the main thoughts. Let's see how well the buyers hold it up this morning and take it from there.